Hey, what's going on, everyone? This is Tyler Coates with the weekly Honest Analysts stream coming to you guys one day early. I'm going to be having a lot of fun this weekend with some buddies for one of my best friend's birthdays. So these guys were good enough to make a last minute change to the time that we do the show so that we don't have to miss out on the stream while I'll be out of town for a couple days. And as always, it is a pleasure to be here with the co-hosts, Joe Saz and Fibbo Swanee.
Yo.
We were just getting ready to dive into some charts, and Joe is going to be starting us off today. So that's always fun to take a look at what the order book's been doing. As we've been talking about recently, Joe tends to feel the most comfortable in ranges as a scalping trader, which is really not very common. And it's a really great compliment for how I approach it, as well as Fibbo. While we've just been kind of sitting here twiddling our thumbs, waiting for something to happen, Joe's been making some moves and dancing in some circles around this range. So that's been really cool to hear and see. And with that being said, I guess I'll first send it over to Fibbo to see how he's doing, and then we will ask Joe to take a look at some charts for us.
Yeah, I'm doing great. Just sitting here, bored as hell, waiting for a signal. I did get a signal on the 4 hour, and I'll show you that here in a minute. But I didn't trade it because I've been waiting on the daily. But I'll show you what I had on that. But I'm just chilling, just waiting.
What good's a signal if it's not on a time frame you get to trade?
It didn't hit all the criteria I like to see. So if someone wanted to trade it, they'd still be in it right now. They'd probably be about break even at the moment, but if they did take it, they're sitting right at break even. It didn't stop them out, but I mean, it's just something. The risk reward is just not in my wheelhouse, so I don't like to do it. But some people are a little bit more gamblers than me and like to take a little bit more risk with less reward. So I mean, I'm just not that kind of person. So I stepped out and didn't take it, but who knows? Hopefully they make good money on it. That'd be awesome.
That would be awesome. And as really not much is changing for anything I'm seeing as well as Fibbo, it sounds like over the last week or so, we will touch base with Bitcoin to see how it's going, of course. But out of the usual, we are going to also take a look at Ethereum against Bitcoin, as I think that is actually in a very critical spot. So asked Fibbo to get together a chart of that, and anybody that's interested in that, stay tuned. We'll be diving into that later. And Mr. Saz, how are you doing today?
Hey, what's up, everyone? Doing better than I was last week for sure. Happy to be doing so. Pleasure to be here. Thank you for having me. And yeah, it's kind of funny listening to you guys like you're in pain, waiting for a trade. All this stuff. I'm so happy to hear that, because here I am just enjoying my trades, moving my trades around, adjusting my leverage, taking some profits. I'm like, I feel like I'm in such good control of the market right now, and it was so funny to hear you guys' pain, because that's how it's been for me for like 3 weeks before 5 days ago or something. But just to make it known, all my trades are still, even though I'm not using token bot, all my trades are still available. I'm still posting what I do. It might be a little late, but take my word for it, or not. But I'm still doing what I was doing before token bot. So anyways, that being said, if you want, we can jump in.
I'll just chime in there and say that I really appreciate all the work that you do there, and the reason why you're not sharing your trades through TokenBot anymore has nothing to do with the results of your trades or anything along those lines. And just wanted to share that I really appreciate the approach of just kind of putting it out there. And there's people that are just going to always be naysayers no matter what, and have you just not believe in what you're doing. But the people that have been following you for a while, for any amount of time, have seen that you have been, telling a very consistent story and doing that on a live basis for as long as I've known you now. So just wanted to mention that, I appreciate everything that you're doing there.
Well, thank you so much.
And it's like, I mean, this is a cliche, but it's like a toolbox. We got 3 different tools here and 3 different ways of approaching the market. And at different times, someone's going to have a lot more opportunity. And I think Joe's taking advantage of that opportunity at this time. And that's what's awesome. So let's see it, Joe. What's up?
Well, wait, first a question. If this is the toolbox, then what tool is Joe?
A multi-tool.
I'm gonna not answer that.
Oh man, I feel like I got a good one in. Okay.
Maybe we got a nickname for you, Joe, the multi-tool Saz.
I was thinking maybe Hammer. Hammer would be a cooler nickname. Call me Hammer.
All right, let's see what you got, Hammer.
All right, so let's jump. Gosh darn it! If you wouldn't mind enabling screen share, thank you. I can't even I'm smiling so much I can't even talk. Could you please allow screen share?
You got it. What a nice way to ask.
Gracious host.
Yeah, that didn't sound like how the Hammer would ask, but I'll go ahead and send it on over.
It isn't, but we're we gotta make sacrifices for the audience. Excuse, I didn't realize this was the background. That's some shit. Man, these signals though, they've been great. So let's look at 2.5 because these are the most reliable signals. And I was very happy to be getting these. And if you remember, I posted that these came up on the 5-second chart at the bottom. So I got in on the long. And we were just getting some nice consistent signals. If you did happen to put your stop loss up here on the first set of signals and consistent signals through the grind, you still didn't even trigger that stop loss. So this was perfect, like ideal, textbook, adding leverage, doubling down, not losing your cool, entering with low lev, taking profit if you want. But if you want to ride a swing, enter with, 1x, 0.75x, and then, you get some signals and bam, you keep riding the tide. Just make sure that my general rule of thumb, by the way, for day trading and swing or short-term time frames has a lot more to do with making sure that if I was to add leverage, my number one goal is that it moves my average entry as much as possible. So I like to make my first entry my smallest entry. And then I like to make my second entry equal to approximately, if I feel very confident, to my first entry so that I move my average entry of my trade by 50%. So I typically won't do that within $10 increments. I don't want to move my average entry $5 unless I'm very certain that this is a top or just a candle that's gone wild and I'm catching a falling knife, which I've certainly done before. But for the most part, in this particular case, we definitely had a rounded top, consistent signals. Every time we pushed through a similar horizontal, we just kept getting signals. So it was great. And so my rule here, just so you guys know a little bit more about the trade life, is adhere to the rules. I was ready to get stopped out even from my first set of leverage, and I came within maybe $50 or so. I think my stop loss was at around 10,855, just to avoid that $50 stop loss, just in case people threw some triggers up there. Not that it would cause much, defense. You'd probably have to go a bit higher. But yeah, make sure that you average entry, because I was adding leverage each time. And by the second time you add leverage, don't forget you're only moving your average entry up by, 2/3 from your base point, from your entry price than you would from the second point. The first time you move your average entry, it's 50% using 1x leverage both times, let's say. And so you have to be aware of that. And by the time I got into this trade, I was in a nice heavy trade. And in fact, I'm enjoying it right now. And then I was in a nice heavy trade, had faith in my signals, and these signals in particular, I was like, all right, time to wait for it for the out. And I got out 50% at 10,550. And now I'm waiting to add that leverage back if we get some signals, which we just started to. And I'm pretty sure everyone heard that clunk because I've been told that that clunk is heard by everyone. But I'm taking these signals. Clearly, these are signals where I don't want to put too much leverage on. I'm only adding 1x per entry as opposed to, say, adding the total amount of leverage that I exited with at 10,550, because that's one of your natural instincts, is to get back into your heavily weighted position, especially if you're certain of the next move. You know, this could very well be a dead cat bounce kind of grindy move. So I'm out 50%, but I'm okay. I'm okay because I was in such a heavy trade anyways. Being out 50% means I take some cake, and I have a lot more breathing room if I want to just let this ride. I can just let this ride now, and I can just trust the signals.
Let me ask you a question real quick. Sorry to interrupt, but leave it on screen share if you don't mind.
Oh yeah.
It looks like you're getting there's a nice dark red signal on top of the price now. Is that a signal for you to short that you're going to be adding on to a position that you're already in? Or so? And I think you explained that, and you were going pretty quick. I was trying to keep up. So you, if you were in for one, then how much would you be entering or adding here? Would you be putting in another one?
Let's say over the course, because I always preferred my 2.5 signals. As we started moving up, we started getting danger signals. I was less interested in scalping. I was more interested in is this a top or not? And I believe that my 2.5 answers that question. So I started seeing this and I started playing my 2.5. I was getting my signals and it was great. Now, your question is, what do I do here? Now, keep in mind, since I was getting consistent 2.5 signals, I was willing to take a greater risk. I was willing to take a greater risk because these to me are stronger signals as one who trades this system. So I was willing to take on more risk. Now that and so let's say that my total risk accumulated over the course of this short period or period of shorting the market, I accumulated 10x. Okay, and let's say that it came down to 10,550 and I exited 5x. What am I doing now? Am I looking for a place to put 5x back in? Yes, and maybe even more. But more importantly, I'm making sure that I don't move my average entry, because right now my average entry is in the money. So if I'm getting some light signals here, yeah, I do want my trade to have a little bit more weight on it. And I'm willing to put on 1x at this range. And if this pushes up into a higher range, I'm willing to put on another 1x, because that is moving at this point at say 5x, and I'm adding leverage. Let's say my entry, I can tell you right now, my entry is 10,702. Okay, so we go up $40 higher. Let's say right now I'm adding leverage to my positions. $20 later and excuse my language, but I'm adding leverage $20 later, and my break even is 10,702, and I'm already 5x. I'm only moving my average entry somewhere around $2 to $5. And I'm limiting in. So I'm not really putting myself in a position of danger. In fact, I've taken profit and I've put myself in a position where my liquidation price is even further out. So now I can come back in with the same amount of weight on my trade with less risk. And that is a very important thing to me. Of course, taking profit and moving it into a hodl position is important too. But I'm also undergoing a lot of and we talk about trade life, it's important to look beyond the indicators. I'm going through some emotional distress and shit, right? I know I know thyself. I know what I'm going through. I know that I can't carry the same weight that I could carry on a good day. So I have to trade with less weight. It's just a fact of the matter, you know? So I'm taking my signals.
Absolutely, and I appreciate it. So if I understood, if you were at 5x coming into this signal that just occurred within the last 5-10 minutes, you would be adding maybe 1x or so.
Yeah. 1x.
Okay. Yeah.
Because I'm happy. Who isn't happy with 5x, right? You're making five times your money.
That makes perfect sense. So I want to sum that up real quickly because you touched on a few really important points kind of quickly. And the one thing that you touched on there on both ends was adding to a position as it relates to your cost basis. And if you're in a position and the market has moved against you in a significant way, you would be looking to add, because that's actually going to improve your cost basis significantly if you start out with small enough exposure. But if you start out with small exposure and the market doesn't really move much and you're just kind of now itching for some bigger exposure, that is exactly the wrong thing to do there. So because it would not affect the cost basis really at all, it would just increase risk. And then on the other side of the token, when position goes in your favor and you capitalize on a little profit and you have a cost basis that's in profit, you want to be very careful about adding to that position because you don't want to bring your cost basis down to the price. And as you explained it, the adding maybe 1x to a 5x position here in your how you outlined it was only going to affect the cost basis a few dollars, $5 maybe, and therefore that was acceptable to you. So a couple really good points that I think you touched on as it relates to managing risk and increasing and decreasing exposure, and kind of going about it in the exact opposite way that most people do when a position goes in their favor and they feel like, I wish I had more exposure, and they then pile in too late and ruin their cost basis, ruin the trade, or the other way around, like I already mentioned. So good stuff. I appreciate you clarifying that, and then also touching on being aware of how personal factors could be impacting your trading, and therefore wanting to keep risk on the downside. Some very astute observations and analysis and just ideas that you shared with us. So thanks a lot there, and didn't mean to interrupt you and take you off screen share, but just wanted to slow down and make sure that we caught all those points.
I'm happy you brought them out, because it's so important as a fantastic moderator as you are to remind us that sometimes we got to slow it down. We spend years in this space. In Swanee's case, he spends fucking centuries in this space, and sometimes we forget what step one was like and how many beautiful people are entering the space. So I'm glad you point that out. Happy to explain and clarify if any explanation is needed, as always. And fundamental concepts are just as important as a strategy. I mean, they really start you off into your strategy. So understanding the cost basis is crucial. I know off my head what I'm doing to my trade, and that comes as a result of experience. So that ties back to how to trade. Make sure that you're exchange literate. Make sure that you're trading with capital you're comfortable with. Make sure that when it comes down into the market moving and you're in a deer in the headlights, that what to do. And it's really important to always make sure that you're trading within that comfort range, at least of your psyche, at the very least. Even if that means don't trade. Because you two just said it. That you're not trading, you're waiting for your signal. And here I am. I got my signals, and I was feeling pretty useless myself for the past couple weeks, right? So it's definitely good stuff. And strong fundamental, I think technical analysis, strong fundamental trader skills to develop. Absolutely.
Couldn't agree more. So did you have anything else to share that you're looking at?
Oh, I'll give out a macro.
One thing that you could share real quick is, let's say very quickly, let's go over, you're not in the market at all. You're just completely out of the market, and you get that red signal right there. What would you enter? And then where would your stop be?
So generally speaking, my stops are always going to be, let's say I get this signal. Generally speaking, if I add to a position, I try to make my stop apply to just that position, because I used to think that it was wise to increase your stop loss as the band was consistent and increased. but that could, if you end up in a heavy position, that could really cause a lot of pain, especially if the market does decide to move against you, and it will do that. So I think the best case scenario here is, yes, take a signal, add 1x, add 1x, add 1x, add 1x, and stop loss 1x. Literally look at the dollar value if you have to, and put in multiple reduce only positions on the buy side, market stop positions at the top of the band, and make sure, you know, these are pretty consistent, so you could probably, you know, bundle them together. But you know, something like this is a prime example of why you wouldn't have wanted to get stopped out of your whole position that you entered at 10.7, 10.693. You know, you would have wanted to make sure that at $100 later, you weren't stopped out of your whole position, and obviously it paid out. So my general rule trading, and these are free, these are all available. SAS signals are SAS dangerous signals, which we're looking at now. SAS 1.0, Bybit signals. So anything done by me, maybe someone copied 2.0. It would be funny to take a look at it. Maybe someone copied 2.6, or made a better 2.5. I'd be curious to see it. But yeah, it's just pretty just follow the map, you know, right? And again, back to the macro trend, that's my strategy, you know, for the most part. I don't like to be, if I have.
I guess I'll just jump in again real quick, is another really important point that you touched on that sounds like maybe it's been a change to the way that you've been trading that's similar to how I like to go about it, that I think maybe could help a lot of people out there. As far as I'm concerned, in crypto, the biggest challenge is the stop loss. And if you're able to figure out a very consistent and reliable stop loss that you can execute, then you will be well on your way to having a profitable system. And the way that I think is the way that I've found is best to avoid just getting completely wicked out at the worst time was something that I talked about on the show last week, which is having the stop loss orders layered. And there's a couple things that you mentioned. First of all, that you used to adjust the stop loss away from the price as the band kept moving, and not doing that anymore, I think is a very good idea, because you can't control the risk when you enter a position thinking that you're risking this amount, and then the stop loss moves away and you don't have no idea how far it can move away before it actually gets you out. It means you have no way to actually control the risk, even though you are using a stop loss. So I think it's a good rule of thumb to have a stop that never gets moved away from the price. And then if you are able to, if you just find yourself consistently getting stopped out at the worst time, like last week, I got stopped out at like right on the bottom wick. I looked at the order and it was within dollars, but I was happy because it was only like 15% of my position or so, and that could have easily been all of my position because it was very close to happening. So kind of like Joe was just showing on the shorter time frame, if you get stopped out on some of the position but are able to hold on to the majority, that's going to more than make up for you know, that little bit that you got stopped out on, especially if you're able to re-enter there. So I think that that's a couple really important concepts, and I really like the idea of the more entries that you make and the more stop losses that you have just everywhere. You know, traps are going to happen, and there's no way that you're ever going to come up with something that ensures that you're never going to get trapped out at the worst time for all of your positions sometimes. But the more that you're able to stagger and layer stuff like that, the more you're kind of hedging your risk of you know, that weird move really ruining a good setup. So thank you again for walking us through that, because I think that was another good thing to share.
Yeah, and just to also comment on that, it's also psychological protection, because if you get stopped out of a percentage of your position, maybe even a lot of it, but you were still right. One of the worst feelings in the world has got to be getting stopped out, getting scam wicked out, getting whatever, right? Just getting kicked out of your position, and then the market just immediately swings, and you were right. So I mean, we're talking about sound money management, and we're also talking about things that are going to keep you sharp as a trader, you know, and that's it always has to fall back on you at the end of the day, you know, as the individual. So I just, you know, it's also, to me, I also like to say it's just as much psychological protection. But I don't really have to go back to screen sharing.
That was another beautiful point that you made that I think is very critical, and where it's so easy to go wrong, no matter how good of a system you have, or whatever you're doing. If you do find yourself in that spot where you get a good signal, and then you get that flash wick that wipes you out, and then the market just moves hard and fast, and now you're stuck on the sidelines, and your only option is to basically FOMO in, because you already got your signal, and now you're out and you're watching the market move, and you know that it can move really far, or you're just sitting there on the sidelines with nothing. And if you're able to have some of that position left, I can completely relate to how much it alleviates the psychological impact, the liminal space of watching the market run away from you. Now it's like a matter of, okay, well, I got 35% of my position instead of none. Now that should make up for it. And now it's a battle of like, okay, I'm not going to be greedy about wishing I had more, opposed to sitting there like FOMOing about waiting for this whole range for months to complete, and then finally getting the signal, and then having that happen. So yeah, that's where it is very easy to give back a lot of the profits that were made before. And appreciate you bringing that up as well.
Yeah, well, you know, I guess the name of this thing is right. Am I right? Am I right, Fibbo?
The name of the game is what?
The show, the show.
Oh, I got you. Yes, it
yeah,
is.
I mean,
I thought you were talking about something else.
This is the trade life, baby. We can't make this look all, you know, bright and shiny. You know, there is a dark side, you know, and there is a fact side. You know, we got to make sure we hit it all. But
Yeah,
I will say,
I was just gonna say that, you know, stop losses are for wussies. No, I'm just kidding.
I used to play like that, by the way. I used to do that, and I can tell you what, get liquidated a few times.
Yeah, that'll do it.
I'll tell you what.
That's the ultimate stop loss right there.
When I realized how many thousands of dollars that I lost to liquidations, I was like, I would rather have had $1,000. Knowing what I could do with $1,000, I should keep $1,000. You know what I'm saying? Like, I don't care. If it's $100. You know what I'm saying? Like, even if it's $100 and I want to do some stupid 100x shit at the right time, now might not be the right time. But you know what I'm saying? It's just like, hey, you can come back from something. You can't come back from nothing. So, you know,
Yeah.
I did used to factor liquidations into how I traded, but I'd rather factor in stop losses to how I trade, for sure. And I'll say thank you for having me. I can just say my general market view before I pass it off, and maybe sign off here to go grab a bite, which you guys seem to be stuck in. But I was thinking, Fibbo, I think you're still right from last week. We're technically getting a little bit of a resistance here. We could fall. We should be falling, I think. And I think if we get below 10.5, things start to get kind of dangerous. And I think it won't take long to convince people that the market structure has changed. So I want to be bullish. I really do. But the reality in me says get ready, because this market structure might change. They might fall off a cliff. It will recover quickly, probably. But I'm preparing for that eventuality. I was actually very, very confident that after that low, that 4K low, and the breakthrough 10K, the fight between 11 and 12, the fight between 10 and 11, I thought that was enough to convince people that price discovery of Bitcoin is valued at least at X, and in the 5 figures. Right now, I think people are losing a little bit of faith. So my overall market view is I think if we get back below 10.5 and we test 10.3, we're probably going to be getting short signals, reliable short signals, at probably around 10.6, and that would be a lower high then yet again from 10.8, and that would start to scare me a little bit, being that if we already made a new low, then I would think we're going to see 4-figure Bitcoin, and we'll just have to analyze the market there on out.
Well, before you go, I'll leave you with a couple things. First will be a quick synopsis of my analysis, which is I don't think we're going below 10.4. I think that that is a level that we're moving up from here. That's my conclusion anyway. So I'll be sharing some charts about that. And one thing that I'm thinking about as you were talking is that it'd be great if we can find the time to get together for a video to kind of just talk about your journey of going from not using stops to now being a believer in them, because I think that that's a very important journey that we could share with a lot of people, and that the best thing that we can do right now, as far as I'm concerned, is really keeping people from losing the Bitcoin that they have trading when they're not prepared with the risk management tools that they have, and the big kind of idea that I have is that the biggest seller of Bitcoins over the next couple of years are going to be people that are getting liquidated. And that's something that I kind of realized on that big move down to 3K, was that it didn't seem like anybody was really panic selling. Like nobody was like, oh my gosh, I want to go get rid of all my Bitcoin because now the price is 3,000 and it was just 10K a couple of days ago. Like nobody was panic selling like you would every time you get a capitulation. This time it was just a liquidation. It was just people that were just even on 2x, just getting liquidated, just getting hammered and getting essentially selling their Bitcoin.
I watched the order book, the whole breakdown of November 14th and on. I remember it vividly. Yeah, you're 100% right in saying that this breakdown was very different.
And that's what I think is just going to be the way all the way up this whole bull market. A big part of the bull market is going to be led by just people getting liquidated, leverage trading. And leverage trading is something that like almost nobody should do in any market. And then if you're going to do it in crypto, like that's the last market. And now you've got people with no experience trading who are just leverage trading, Bitcoin. So that's something that, if we could get together for a show about, just the importance of stop losses and the idea of the importance of, keeping the Bitcoin that you have. And yeah, if you want to learn to trade, great, do it and take $10 to learn how to do it. But in the meantime, think about how the 0.05 Bitcoin that you get liquidated for may be worth a couple hundred today, but that could be worth, many thousands in years to come. So that's the last thing I have to say there. I'll let you get to some food, and thanks you very much for sharing all that knowledge. You hammered it right in.
Yeah, happy to help, and the show is there to rewatch, people. But anyways, hit that like, hit that subscribe. Love you all for the support. Thank you, everyone, and you guys. I'm look forward to watching the video later myself, so I can see both of your views on the market. Maybe see a couple chickens with their head cut off, and then laugh about it later.
There you go.
You're not going to watch it while you're eating dinner? Get out of here.
Maybe I'll listen to it on my way. But all right, much love, guys, and much love, everyone. Thank you so much.
Later, Joe.
Right, take care, guys.
Later, Hammer. No, when you talk about stop losses, it's that's a show in itself. Like you're saying, it needs to be talked about a little bit more, because the way I look at stop losses is the same kind of thing when you look at trend lines. They're very easy to place and they're very easy to draw, and you can put stop losses all over the place and you can put trend lines all over the place, but they're easy to put on there, but they're tough to master, because I think stop losses can be placed in different ways based on how the market is setting up and what kind of structure the market is in could be weighed in on how those stop losses are placed. So there's an art to it along with the science of it. So I think that would be something to go over, a little bit more with a fine tooth comb and say, hey, this is what stop losses are all about. this is better ways to place them, those kind of things. I mean, even just like simple trend lines. I mean, people draw trend lines all over the place, but 9 times out of 10, they don't mean shit. And sometimes when you put a stop loss on there, like what's making you put a stop loss at a certain spot? You know, there's got to be some reason, and you got to have some validity to it. And maybe that's what we need to kind of talk about. Not tonight, but I mean, it'll be a show in itself for sure.
Absolutely, and we would need you there for that show as well. The number one thing that impressed me about watching you trade in real time and made me very interested in learning more about your approach is seeing times where you were setting stops that I just felt were way too tight for the crazy volatility that we've been seeing, and generally how the stops that I use are pretty loose. Anybody that's followed me for a while, you know, it's going to be like 10-15% is going to be the range that I'm looking at, feeling comfortable with my stop loss being set. And Fibbo, I've seen him set some tight stop losses on the daily chart. It's not like he's trading a 5-minute chart or something in some volatile times, which that's what really makes me sit up and be like, wow. That's...
It's funny you said that, because the 4-hour trade that just posted the other just a couple of days ago, I had a stop at basically just under 10.5. It was at 10.490 basically, and we hit 10.516. I thought for sure it was going to hit, and it didn't, and it bounced from it, kind of where I thought it would bounce from. I was hoping it would bounce from there, but so it was tight, and everybody was probably like, "What in the hell?" But I was like, hey, it's either going to break right here, or, you know, you stop it out here and we'll look at it later, or it needs to bounce like right now. And it started to find some momentum. And I was like, thank God. Because it was getting really freaking close. I didn't even take the trade. I was just doing it for the people that did take the trade. I was like, hey, you know, this is where I would place it. And I gave them the reasons why, but yeah, some of them are a little tight, and it does freak you out a little bit, but you just got to go with it. It's all about small losses and large trend gains, right? I mean, that's really what it comes down to. So you just got to kind of play that, and you know, you might hit 2 or 3 stops, but at least they're tight. And then if they're set right and you get hit, that's telling you that you need to be out of that trade right now. I mean, you're not supposed to try to play around with it. It's not right. It's not working the way you were thinking. So you need to get out and then reestablish. But then if it holds and it keeps continuing the trend, that's when you're golden, and you'll make your 15-20% instead of, you know, maybe you lost 2.5% or something, you know, on that or something like that. I don't know, but yeah, it was a tight trade. People are still in it, probably break even if they're even in it anymore. But I'll share my screen so I can show you what in the hell I'm even talking about. Let's see here.
Yep, I know that you've got to get going here at the bottom of the hour, so let's make sure that we get.
Yeah. I'll get this in here. Let's see. 4 hour. What I was looking at here on this vertical line right here. What was happening was we broke this 38.2% going this direction to the upside. It had the third close right here above that level. So in theory, that's usually a buy signal when you get 3 above. And it was getting a crossover at that point, but the ADX kept decreasing, you know, the candles before, so that there wasn't any momentum for this. And what was happening was the RSI stayed inside this bearish zone. So when this was somewhat trying to make a signal, it really wasn't at this point in time. So that's not really where the threshold is, because the threshold didn't happen until about right here on this. And this is when the ADX just started to level off. Still really low, nothing that I really like, because it's well under 20. It's still right around 16 or so. And I don't know, it's just momentum just sucks right now. So I don't really like it, because I like momentum and trend, because I'm a trend swing trader, and until there's trend, I really don't want to do too much. But what happened was we got the signal right here. It was right around 10,650 or so. It's basically where the market is right now. And then it went up, made a high, and then it came back down. And right at that threshold was the 100% level. The stop I had in there was at 10.5 or just under 10.5, which is based on a couple of these other back levels. This 38.2 here, there's a couple other things I explained, but basically the 10,490 to 10.5 range was the area to really watch, to hold, because what would happen is if this broke down, the 100% level, another full move of another 100% was at 10.5. So at 200% was at 10.516. So I was thinking, well, it needs to be placed somewhere between 10.490 and 10.5. And that's where I was kind of looking at. Came down and hit 10.516 and then started to bounce back up. But the thing is even if you're in this trade and you're still in it, you're right at break even, but you're still in the bearish mode down here in the RSI. The ADX is still dropping, showing no momentum for bulls. Even as we get up to this previous high or previous low, which is is now the high, which is now resistance. So what happened is we broke down into the bearish zone. So this whole area right in here kind of sets up a new area to where you can look at fibs. But the thing is like this level right here going down this other direction is basically matched up the same. This 100% is the 61.8% going the other direction. So this 10.6 level is pretty key. So the 10.6, it's kind of what Joe was kind of talking about. If this holds and it starts to break down below this 10.6 again, most likely we're going to continue lower. I mean, depending on your risk tolerance, you can hold the 10.5 in there if you want and just kind of keep it going. Since the momentum is really low, it might not even break out. But right now, this 10.6 is the level to watch. I'd like to see at least 3 closes above this level around 10.6. But the thing is, you need some momentum. You need to get out of this bearish zone. So everything in the 4 hour, this whole area in here is just nothing but noise to me. So I mean, so I don't know. There's just not enough for me to get excited about, to really get into the market, because it's just whipsawing back and forth, and it's just not my cup of tea. So what happens is when you look at this range that we're in, and we go over to the daily, everything that we've been doing is just still in this little zone in here as we move toward the apex of this triangle pattern. But the thing is the red negative directional index still has not crossed. The ADX is still kind of shit. It's doing nothing. You're still in the bear zone. So without any momentum, you're just going to keep moving toward the apex of this pattern, or the risk to the downside is still there. And that's one thing to be concerned about. But unless this trend line breaks to the downside and actually has some momentum behind it, most of the time, most of the things that I look at on triangles is the breakout's usually 3/4 of the way. And if it doesn't break 3/4 of the way and there's no momentum, most likely you're just going to go to the apex of the pattern, and the pattern really doesn't matter anymore. It's just kind of a piece of crap. It just kind of just dribbles off into nothing. But if it starts to build some momentum and we start to get out of this pattern, we're either going to break this, this 11.1 to the upside, and the RSI is going to, bust into the bull zone, and maybe we'll get some momentum, or it's just going to drop below this trend line and it's going to stay in the bear zone. And if the momentum's not real strong, maybe it just goes back down to those previous lows, or if the momentum kicks in, that's where these extensions start to come into play. But right now, for when it comes to Bitcoin, I'm just still I'm really waiting for this daily signal to give me that key level of threshold that I'd like to see, to give me a difference in trend. So right now, when you pull it back, and look at the whole entire thing, this trend here is still in play. So even though we went up and we kind of went sideways and went up, we're back sideways again. We're still relatively structural bullish, just not a lot of, strength to really push us anywhere right now. But I want to mitigate that downside risk. So that's why I'm not buying at this point in time, because if it does break the trend line, it could get a little ugly as that 9.2 becomes the target, which is right around this 38.2. which is that this is that 9,200 is the key level for this long-term structure for me. So even though if this trend line breaks and goes to 9.2, I'm still structurally bullish. But of course, I'm going to get out of some of my longs if this 10.3 kind of takes out to the downside. And it's basically what you're saying, Saw, that 10.4 should hold. And if it doesn't, it could get pretty ugly. And that's kind of that area that I'm looking at too on this trend line is if it does break down, that's when we want to be a little bit more observant of that. But right now, without the momentum, right now, I think it should continue to ride and hopefully get us to the upside here pretty soon. But until then, just wait for the signals and go from there. Anything on that?
Yeah, something's jumping out at me that I haven't talked about much. That
On the daily or the?
Yeah, right here, that I'd be
Okay.
curious to hear your thoughts on. So one of the main things that Wells Wilder talked about with the RSI is using it to identify patterns, sometimes that don't even occur in the price, and then also using it to draw trend lines. And that's where I've actually found the RSI the most effective. The only time I've really been putting the RSI on my chart over the last couple of years has been to kind of look for confirmation of a trend line break, or to look, it can actually be a leading indicator of a trend line break, which is where I find it to be most interesting. And then I also will like to see when there are some patterns in the RSI that are showing signals of strength. Remember, it's the relative strength index. So, and I'm of course not talking to you, but the audience. So when the patterns in the oscillator are showing strength relative to the price, something else that jumps out at me. So we have both of those here. First thing that I'm kind of seeing in the RSI, it's in your bear zone now, but we do have some support on your green line where.
Yeah. Actually, when you mention that, this, like when you look at this zone here, the in between where they overlap, right here, that to me is kind of your dead zone, basically.
Your neutral zone, yep.
Yeah, your neutral zone. Because I mean, as you can see, that all the moving averages are completely flat. We've been flat in here, so the RSI has just been flat. So you're in this zone of nothing at the moment.
Absolutely.
But it is in the overall bearish zone, so there is a little bit of a slant to the bearish side because of the zone that we're in. But there, without the momentum, it just stays up in this no man's land to where it could easily pop into the bull zone if it starts breaking to the upside, or it's just going to continue down into the bearish zone. And if that happens, most likely your trend line is going to break. Is that what you're saying?
Actually, I was kind of looking at it on the other direction.
Okay.
So first of all, the pattern, I'm kind of just seeing a couple cup and handle patterns in the RSI right above the E and the A in the bear zone. We kind of have that little cup, and now we've got the higher low to the right with the kind of handle. So we see just to the right of your mouse there, the handle to the cup, and we see that maybe there's a slight lower high in the RSI, but notice relative to the price is a significant lower high. Like you can draw on a trend line from those highs that started that top left part of the cup, and so that tells me the strength index is actually showing strength for the bulls here, even though we can't see it in the price, and the pattern isn't confirmed. It is showing me a little bit of strength. And the other thing that I was looking at was actually taking a different interpretation of the bear trend line that you have drawn on top of the price. If you draw a bear trend line on top of the oscillator that starts at the beginning of August, and then kind of see how there was a breakthrough and a throwback to retest it for support.
I don't know where you're looking.
The top
right here,
right there. If you draw a bear trend line starting there
to this point right here, like this.
Yep, just connecting to those eyes. Perfect. So we have, there's our bear trend line. So for me, I would trust that trend line more than I would actually trust my trend line drawn on price, because I have noticed that trend lines in the RSI just can be much better defined. So here we see that we have a bear trend line with 3 clear touches, and then a breakthrough, and then a throwback and a retest. And maybe originally I'd have the trend line drawn like Fibbo on price, but after seeing that on the oscillator, I would look for a similar trend line on price. And I think that there is one if you were to kind of adjust that top trend line on the price down a little bit to kind of line up with that breakout on the oscillator. If you don't
Talking about this, like here?
chart, yeah, exactly. But just even a little bit more. But yeah, keeping it at that high, at the highest high at 12 and a half. And then, but using the wick, yep. And then trying to hit it with, seeing if it connects, yeah, kind of right, yeah, so perfect. So here's where potentially the RSI is a leading indicator showing that the RSI is already broken out of the trend line and retested it. And the price is still stuck in the tightest trend line that we can possibly draw here. So that's actually very significant to me as one of the better leading indicators that I've come across. And I'm curious to hear any thoughts that you have there.
Yeah, no, I look at it that way in a different way. I know what you're saying. The thing that I don't like about it is when you look at this area right in here when it broke, and then you look at the internal momentum at that point in time. So when this broke right here, the ADX has dropped ever since. So there hasn't been enough momentum strength. So to me, when there's a trend line break, there's 3 things that can happen on a trend line break, or 2 things on a bearish trend line. You're either going to break to a bullish market, or you're going to break to a sideways market. And since this broke down and the ADX is dropping, and it shows that internal momentum as getting weaker and weaker, that this trend line break to me is not a bullish break. It's a sideways break. So to me, that goes back to the way that I look at it, as this zone in here is all sideways, and I need to either get it to break down further into the bear zone, which most likely would happen on a break of this trend line, and then it brings these lower levels into play, or it stays in this sideways zone, and all of a sudden this horizontal is your next trend line. So if this breaks to the upside, that's the break of the bullish zone to me. So that's the only, not that you're wrong at looking at it the way you are. It makes complete sense. It's just that the way I look at it is I take the changeover in the actual internal momentum strength for trend that's going on at that time to let me know if it's a strong break or not. That's just the way I look at it.
No, that's a great input, and I'm glad that you said that, because that brings up something. I guess I've got a response to that that goes to the deeper levels, I guess, of how I think about the markets in terms of. So, first of all, when we're looking for a leading indicator, I would expect a leading indicator to occur when other things are, still not yet showing that strength. So, for example, the DMI for me, that's a momentum indicator, and the RSI is a strength indicator. And I think it's really important to have both, to have a momentum and a strength. And for me, what comes first is strength. First, you have the strength to push the rock over the hill, and then after that happens, then the momentum builds. So what I'm seeing here is strength out of the bulls. As the price is coming down and being pushed, we're seeing signals of strength from bulls, which is gonna, I think, should precede the momentum indicator really showing us good momentum. So if the momentum is waning, but one side is actually showing strength, to me, that is still very important. And I would look for the strength of one side to then be what leads to the following momentum.
Yeah, no, I see what you're talking about. The way, I mean, I use this as an example over here on this one over here. When you look at the same kind of thing that we're looking at right now, going from bull to bear, it broke right at this point, but the ADX has dropped ever since. It started to level out right in here, but this whole middle zone is where it kind of went sideways. But then the green crossed over, and then we got that crossover. So yes, I do see the trend line as an indicator that says, hey, this could be the first sign of a move to the upside. But you need the crossover for one. So you need the break of the trend line, which we haven't had yet. So we're getting close to that. And then once you do get that break of the RSI, because I look for that first, just like you're saying, the strength comes first. And then as you can see, the ADX starts to at least level off and start to grow as it goes right here. And then you get that break to the upside, and now we're in the bull zone. So that's what I'm kind of looking at in this section, is the same thing. It broke this level, and I agree with you. It's an early sign of a possible bull move. But how long do we stay in this sideways action before that happens? And to me, I look for that movement in the ADX to help validate that strength signal that we got. And right now, the strength signal is early bull, but no momentum yet. And as soon as that momentum starts to build, I think that's when we'll start to break up to the upside. So I think we're kind of looking at it the same way, but yet slightly different.
Absolutely, I would agree, and I think that it's more a there's many ways to skin a cat.
Exactly.
I guess the way that I like to try to buy buy as the prices falling into support, and when that's happening, sometimes you'll actually have the bears kind of like building momentum, which kind of will get scary. And as we've kind of followed along with each other's trades, we've seen a lot of similarities and also some differences. And there will be some times where your trend is just bearish, and I'm buying because it's in my bullish spot. So for me to wait for that DI crossover, for the green DI crossover to then actually expand and not just be a kind of a choppy crossover like it had been in the past. At that point, the price had already basically left me behind. So I definitely agree with you that we should need to see something like that to support a big move. Whereas thinking that this is a time where I really like to enter potentially when I'm seeing a dip and then some signals of strength at some areas of support before that momentum really gets going.
Yeah, no, and I agree with you. That's a good way of looking at it.
You're a dip buyer as well.
Yeah, and the thing is I think what it is we're both looking at it in a different way, but this comes down to basically risk tolerance, and based on, so in other words, like, you might get in a little earlier than me, but you're taking on a little bit more risk, versus I might miss the 1/3 bottom as the price starts to go. But to me, I would be a lot more comfortable getting in because I know that the trend's a lot more established. So I might miss out a little bit. So my risk tolerance is a lot more conservative, and I'm waiting for that really strong, high probability signal versus that leading signal that you're looking at. So you're willing to take on a little bit more risk than me, but we're both looking at it in a way that we should be looking at it. Does that make sense?
Absolutely.
Yeah. And not that you're wrong. You're just willing to take a little bit more risk, taking that leading indicator. And I agree with you. It makes complete sense to me. But I'm a high probability trader, That's why I don't get a lot of signals. But when I do, you're making your long percentages, and you might only get a few, here and there, but they're high probability trades. You might miss the first 1/3, and then you just ride the trend until it's not your friend anymore, that kind of thing. But yeah, I like the way you're looking at that. I haven't looked at it like that in a while. I just look at that overlap of my RSI levels as my basically consolidation zone, and I'm waiting for it to break out of that zone one way or the other. And typically it takes price to make that move. But the way I like that you're looking at it is you're looking at it without the price having to move, seeing that leading indicator. That's what's key about this whole thing. And I think the people listening will learn a lot from that, is seeing things in the indicators before price tells you that it's there. That's a key thing. Not an easy thing to learn, but I mean, it takes time to grasp that. I mean, it's not something that you could just look at. I mean, if you've done it for a long time, yes, you'll see those things rather quickly. But when you're first starting, that's a really good technique to look at the RSI. And what you said, strength first, momentum second, is also a very key thing to learn also. So those are all really good stuff, for sure.
Yeah, I'm glad that came up, because a lot of good topics, and this has been definitely a show that I think is brought up a lot. And before I guess you go off of that chart, the one thing I wanted to mention was how the main thing that I've gotten out of you from the RSI and every oscillator now that I use is the horizontal zones. I've just never seen or tried to use these horizontal bull and bear zones, which like the 0 or like the 50 on the RSI, like that's like supposed to be kind of the bull bear zone or whatever, but it just it never really worked for me. But the way that Fibbo will draw the zones on the recent trends and moves has totally opened my eyes. It's the first, I haven't used oscillators in a while, and it's the first time that I have been, and it's been really exciting for me to try that out. So just the one other thing that I wanted to mention, I guess it didn't really need the chart, but I guess a good thing to look at while we're still on the same topic is the dynamic that I am most fascinated with when it comes to trading, because it's a spectrum as far as I'm concerned, as far as I'm convinced, that on one side is strike rate and on the other side is risk reward. If you can find the single most high probability setup that in the whole market, where it's just the most likely that you're going to be able to get to the target before getting stopped out, the risk reward is probably going to be shit, and it doesn't, and that's fine. Like you could literally have a risk reward that's 0.2 to 5 if your strike rate is 70 to 1 or something like this. So if you're
yeah, I know what you're saying,
in a spot where you're having a tremendous strike rate, you're going to sacrifice risk reward. Whereas if you want to go for the best risk reward comes when you get these huge counter trend moves down, and like say you want to try to catch a knife and you want to do it with a really tight stop loss, that's going to give you tremendous risk reward in a volatile market with a lot of upside, and your strike rate could be 5% if your risk reward is good enough. So that it's that combination of finding that perfect balance of strike rate combined with risk reward, and that's where we're both so similar with how we trade, is that sometimes you get in earlier than me in a spot where I'm not taking any risk, like a lot of the bottoms that you bought recently were spots where I'm just like, heck no, this is a bear trend for me,
and vice versa. And vice versa. Like,
so that's what's so interesting. Yeah. And I know you got to go, so I don't want to keep.
No, this is too good. I told him 9 o'clock, so I texted him 9 o'clock, so I got a little bit more time. But I want to show that Ethereum chart that we said. So
that
was one thing I was going to ask. So
yeah, let me pull that up. I didn't have it up yet, but let me pull that up real quick. I did a daily, so hopefully that's good enough. But Yeah, the chart I'm on here is the daily. It's on Binance. It's just the one I looked at real quick. The I laid out the zones that we're in at the moment. The starting back here with the bearish zone, and then we moved into the bull zone right here. 3 days after that trend line break right here was basically where we went into the bullish zone. So there was a start of this level right in here. So this would be your buy as we move into this zone. A lot of times when you break trend lines, and anybody that watches trend lines, you'll notice that you'll get that initial breakout, but then it kind of falls back toward that break point, and you get that throwback to the line, and that could be another buy spot right in here. Let me blow this up so you can probably see it a little better. The break point right here is kind of your 100% level. You go up and you come back down, but the 61.8% level is right here, and it never closed 3 days under it. So it stayed. So in other words, if you bought in here, you would still be in the trade, and then you take off to the upside because you got a couple of things. It went into the bull zone. It had the ADX to validate the strength for the trend. So even though it went a little bit sideways and down, the trend was there and wasn't really going anywhere because we're up in the 20 to 30 range, which is nice. So with this coming down, if you didn't buy here, this was another spot to possibly buy, and then it went off to the races, and then you work off your move to the upside here. You take the break, the threshold up to this point, your 38.2% levels right here, and then actually the ADX started to kick up right here as we broke down into the bearish zone. So if you bought in here, this would be a spot to either take profit, or there's other places to take profit, but if you're just following it from signal to signal or threshold to threshold, this would be we're in the bear zone now, so be careful of the downside. Went to the 61.8% level, and then it fell even further, and then it kind of stayed in the bear zone for a little bit. But it wasn't until this point when we broke back in, and same kind of thing. We got to move up, and then a move back down to the 61.8%. But this went to the 100% where this one started, and then it fell even further. And so if you would have gotten this trade, you probably would have been stopped out right here. You probably would have lost a little bit. But that's that tight trade that you either stay in and make the big trade, and then you either get out and take a little bit of a loss as it works its way down here. It went up to the 200%, kind of went around this level for a little bit, stayed in this bear zone, and then we broke up into the bullish zone, and we kind of been in this one since until just the other day. And this one broke out at this point, and we've been in this bullish zone for a while. Tested it a few times right in here. Never really got a really good 3-day signal here yet. And as you can see, it stayed in that bull zone, touching that support, and then it finally broke right there. And then that's when we got the signal. And now we're working to our way to the downside. But so with this trend line here and the intersection of the 61.8% level, you're looking at, basically almost three sats here, or, on the, or 0.02 Bitcoin, basically or 0.03 is where that intersection is. So right now the risk to me is this downside at the moment, as it works its way down to that 61.8% level, because that's now resistance as we're in the bearish zone, and the ADX is relatively low, but the bears are still in control. So I could see a little bit of a move down. So unless this momentum really builds to the upside, this would be the level where I would be looking to buy. Unless we got a lot of momentum and you think this trend line is going to break, then of course you don't want to. Because if it breaks, then that's why I stretched it out to this point right in here, because I think if it does go through there, it could wick down into this area that I looked at right here. You got this previous high, and then if let me take some of this out. When you look at the extension, which I would do off of this one right here, the move from this low to high, as it broke this 100% right here, The 127 to 144 would be the zone that I would originally look for a possible ceiling. And it's also this previous high. So as you can see, this right here is a major support or a resistance flip to support right here off of this extension zone. Went up to the 200% here, and then we went off to the races. But when you extend this over, this could be an area where if the trend line does get tested, it could wick down and come back up and keep this as support. So this is a good spot for if I bought in here, my stop would definitely be a little bit lower than this spot, because anywhere in here you're going to get your ass reamed is basically what's going to happen, because it'll wick down and you're going to be all pissed off and I'm never trading again. I'm running and cry to my mom and all that kind of stuff. So you don't want that to happen. So, but the way this is looking right now is not a ton of momentum, but the ADX is increasing for the bears. So I think a little bit more move to the downside here, and that will be my buy zone unless the momentum starts to kick butt to the bear side. So that's what I'm looking at. Those are the zones I'm in. But right now it's really nice because if you're in this threshold, you would have been bought right in here and you would have been riding it for a while. Most likely you probably would have taken some profit at one of these up in here, because you were starting to get a little bit of a, like if you look at this versus this, you're getting the divergence a little bit on the RSI. So that could be a spot saying, okay, we're getting a divergence here. Not a strong one. But when you look at, like what you were saying, when you look at it this way and this, you're getting the higher highs, but you're getting the lower lows on the RSI. So you might have taken profit in here, but if not, you would have probably gotten out about here. So, I mean, it would have been a pretty decent trade, buying over here and getting stopped out when you got the signal here. So,
you wouldn't have been looking at some extensions to take profit, or some higher time frame retracement levels?
Yeah. I was just using that as an example. One of the spots I would probably look at is this one right here. The first one would be right at this point. That would have probably been one spot where I probably would have taken some. I didn't trade this, but I'm just going off what I would normally do on thresholds. This would probably be a spot where I would take some profit. But then
I was asking, I hadn't seen you use the divergences to take profit before, but I had seen these extensions.
I use them as validators. I don't really use them just to take profit, but if I'm getting up into a fib zone, and like just mainly it's not that one, it's basically this one. You're moving to this high, and then it goes up into this one, and then you got this one right here. That would have probably said, okay, let's take some profit here. It did go down, but if you take the fibs, if you take the fibs like I normally do, and you ride it to the upside, like if you keep taking the highs like I like to do, as you can see the 38.2 held right here. You go up to this one, it didn't come close here, but then you get to this one. If I would have taken profit here and it came back down here, and we're still in the bull zone and everything looked good, I probably would have bought back, possibly. But that's just the way I kind of look at it. And then when you get up to this one here, you get that 38.2 right here, and then that's when it finally broke. So
it's interesting. So one quick question. We're running out of time. I'm wondering, for me, when I see you're showing that divergence on the RSI and the price right there as being a critical spot for you, and what is like maybe 5 times more important to me would be that ADX rolling over after a nice move, telling me that the bulls are exhausted. How would you view that ADX rollover? Is that something that's even important to you?
Yeah. I mean, I would definitely take that into consideration. That's kind of my third or fourth thing I would look at. I'm not real big on that because the only thing I would do is if the ADX is, if I go back historically and look at how far this has extended like this, and it gets back up above this zone, like this like when it moves out of this zone back down into here, that would definitely be something I would look at. But it's kind of my third and fourth criteria for validation. So if it's all lining up like it is, like when this hit the high right here, it kind of bounced a little bit right here. So I probably wouldn't have looked at it, to be honest. But that latest move right here, when it broke down, would be the spot, which would be right around in this area. So you're still taking profit at a relatively decent spot. But that divergence, the fib level being at a 200 extension, so basically just another move up at 100% is all it is, and that's getting up to a spot. So you got the divergence, you got that, and if this would have rolled over right there, I would have been, oh yeah, let's absolutely do it. But those are the kind of things that I look at. I didn't trade this one, so I'm just going off assumptions of what I would normally look at. But those are the kind of things that.
Yeah, that was my question, and it's interesting because so the real divergence to me that is important, because so what we see here is what I've seen too many times on the RSI for it to help me too much with the divergences, where you get the first divergence that you have drawn, and then another one, and then sometimes another one, and sometimes those keep divvying. Whereas the very strong divergence to me is when that ADX rolls over and starts moving down as price keeps moving up. There towards the beginning of September, end of August, we see that the price kept moving up as the ADX had rolled over and moved down, indicating that the bulls are exhausted, yet the momentum is still kind of just giving it the last gasp to the upside. So that would be something I would be paying very close attention to in terms of divergences with the oscillator and price. So yeah, glad to
no, I know exactly what you're saying, and it makes complete sense. I actually look at it more horizontally, like I do the RSI. So I look at zones just like I do with the RSI. So even though it's dropping, it has to drop back out of a zone. I don't have those drawn on here, but if I look back historically and I create those zones, and I did this off the fly. I don't even know if that's the right zone or not. But if just say this is your exhaustion zone right here, I don't do anything until it drops out of that exhaustion zone. But that's kind of what you're saying also, is when it starts to turn. But you're talking about when it actually starts to turn. I actually wait for it to drop out of a certain zone, and then the next zone could be basically, it could be something like, like this, to where if it drops down into this zone and stays in this zone, it's still bullish. It doesn't turn bearish to me. It's just a little bit weaker of the trend. And that's why I think you're getting higher highs as the RSI is showing the divergence. So, so to me, it's all about where the levels are in different zones. So, but I think we kind of look at it the same way, just a little bit different. But yeah, when it starts to roll over, that's the first red flag for sure.
So yeah, I appreciate you sharing there, and yeah, would be interested if you maybe started drawing some zones or
sure will
on that DMI, because I guess that the area where I do definitely use horizontals is going to be on oscillators at the extreme points, whereas you really showed how to use them at the inside of them, and the high end of the DMI, not so much the low end, but the high end and like 30 or 25, whatever you want to use for the trend. If you get to the high end of 60, whatever it's going to be, based on historical, and then you roll over and cross it down, I absolutely agree that that's a very important signal. And then 30, 35 is where I would look for it to support on a pullback before pulling back to the upside, and those horizontals on that oscillator can be interesting. And a couple minutes left before signing off with you and sending you on your way. I'm going to share one chart with you, because as you were going through this chart, a couple trend lines jumped out at me that related to what we were looking at earlier. So just wanted to share really quickly and then get you onto your.
Yeah, I don't want to give all my secrets away on one show. You know what I mean? I can't give it all away.
That's for sure. And now that
I'm just teasing.
Seeing my desktop, I have to give the quick shill for the week, which is my absolute favorite artist ever. Aesop Rock is coming out with a brand new album in like a month, which is when I just heard that the other day. Spirit World Field Guide. I cannot tell you how excited that makes me. So just very quickly, I was just kind of seeing some trend lines in the RSI leading the trend lines in the price as Fibbo is going through that. So put together a couple here where I thought it'd be maybe something viewers would be interested in, where we see that we have this trend line here, and then as it's kind of building strength, and then here you're at resistance, and you're wondering, is this a spot to sell resistance or whatever, maybe looking for a confirmation of the spot to sell like we see here. Or you're looking for a leading indicator for a breakthrough. And then here, this move right here is what actually caused the RSI to break through the trend line. And then this pullback here gave a nice throwback there. And then we kind of see a couple other situations like that where you've got this trend line here, and then you see this RSI is moving down hard and fast, just really weak. Then it breaks out here. Like, look at how early that is. Like you have one green candle. These aren't even Henkinashi candles. One green candle, two green candles maybe leads it from down here to breaking out that trend line, which was well before we see here. And then something else that kind of jumped out at me was this trend line that was a while ago, had kind of something similar here with the 3 touch points of the trend line, maybe confirmation here, something like that. And then here, well before touching the trend line, you have this, I mean, smashing through and then coming back to retest. So it's interesting to see potentially what we have here with this trend line. Maybe you draw it like that, or maybe bring it down like that. Either way, that thing has definitely broken down. But on the other hand, if you were to zoom in a little bit and take this high and connect it to, like this high-ish, then potentially we have either maybe some sort of confirmation or some sort of a leading indicator to breaking through that one. So that's where, again, like Fibbo talked about, there can be a lot of mixed signals sometimes where you have this this bull trend line breaking down before this one does, but then you have the bear trend line breaking through before this one does, and knowing how to really, not get lost in the analysis by paralysis and put things in a hierarchy is just going to take some experience, and potentially just this might be something that would be useful for some people out there, because that is, as I mentioned, how I've found the RSI most useful, and now it is the top of the hour, and Fibbo has been so generous with an extra half an hour of his time, and I really do appreciate that, and I don't want to.
Hey, no, this is all good stuff, man. I stick around for good stuff, so I thought there was a lot of good information in the show that I think people will get a lot from. So I'll stick around for that.
Well, thank you so much.
But I can't stick around anymore, so I got to run.
I know. I don't want to keep you a second longer. So thank you again, and
all right, man.
We will catch up soon.
All right, later.
See ya. All right. I'm assuming I'm still on air. Double check here. Seems like everything is good. I am also the type who is very willing to stick around for good information like we've had today, and also, you know, hoping to do my best to provoke it. So I am not going to shy away from sharing my charts, but I do need another cocktail, so hopefully you guys can wait. All right, much better. Got a good question from Misha Grannon. Strike rate from EMASAR trader / investor mode. Any numbers back testing it? I'll go ahead and answer that before diving in, as that was something we talked about earlier. And at the workshop I did in Las Vegas for Unconfiscatable this year, that was kind of one of the main themes, was finding the ideal combination of strike rate and risk reward. And the kind of baseline, I guess, that I have for looking at a system, or yeah, I guess the baseline would be a 60% strike rate combined with a 3-to-1 risk reward. That is going to be the sort of combination that intrigues me, and up to something like a 5-to-1 risk reward, maybe with a 50% strike rate, somewhere in this range. And so in comparison, patterns are some of the best tools that I've ever used myself in terms of finding that combination. And the general risk reward for patterns is 2 to 3 to 1, say 2.5 to 1 on average. And the general strike rate is something like 60%. So that was kind of the, if you can't beat that, then I'm not interested. And that is why I'm so enthusiastic about EMASARs, because it is by far the best combination of strike rate with risk reward. The back test that I've done myself has come to a 5.55 to 1 risk reward, combined with something, it's like, yeah, right around 70%. I want to say 68%, but I don't know if that's just a fib number popping out. Yeah, about 70% with a 5.55 to 1 strike rate, which is the best combination that I've ever found, which is the only reason why I'm trading it. And that is, again, what I think is the most important thing, is that combination, strike rate and risk reward. So that being said, let's go ahead and dive into some charts. Thanks everybody for still being here. It's been a long show, but a good one. When doing a show like this, it makes me think that, you know, this is something that just, it could be charged a lot of money for, and if it was, maybe you know, like people would certainly maybe pay closer attention if they were paying for something, opposed to just hearing it in the background on YouTube, and that is so far nothing due to me. That was all stuff brought up from Fibbo and Joe, and me just doing my best to clarify it. So getting the opportunity to have those guys share that kind of that high level wisdom, I don't know where else you can find that available. And if you do, please send me some links, because I love listening to other you know, good information as well, and I'll be quick to share that myself. So sharing screen. There we go. And shout out to coauthor. Thanks for the kind words. Always good to see you around. Okay, here's some ETH BTC stuff. We will come back to this, so don't you worry. Okay, just going to share some quick charts. Don't think I should take too much time here, but when I've got the mic all to myself, it is quite hard to shut me up sometimes. So let's see how it goes. Okay. Not a whole lot has changed on the higher time frame. So when the markets are really dull like this, I find myself looking to some lower time frames, trying my best not to let them, you know, screw my head into a ground, only looking for some really important setups, that type of thing. And that's what I'm going to be focusing on here. And before that, we'll just kind of dive into the kind of curvy trend line that we've been following here for a little bit. Are getting a nice reaction from it. I was drawing, you know, some straight trend lines, and of course, when those fail to hold as intended, it's time to go back to the drawing board. And this is what I came up with, and I've been liking it so far, because it kind of, you know, connects with a lot of points. And then we are getting a nice little reaction here. So I guess one thing that we can kind of check on that would jump out at me, as we have been talking about it today, is to maybe see if the RSI is going to be leading any trendline breakthroughs. This is where I'd be looking, is where, you know, I'm not quite sure where to draw it. So I would be wanting to look to the RSI to help me understand maybe where it should be drawn, and then also to help maybe lead the way. And I haven't actually checked this, so that'll be interesting to see. All right, I guess I did have the RSI pulled up for that ETH BTC chart, and sure enough, we are, you know, getting an interesting situation where, okay, this is this high, so really I'd be careful for that, because the div kind of can screw with that. So I would want this high, and I'd go there. Still, we're kind of getting the same thing. I mean, you can't draw it really any higher than that. So therefore, seeing such a nice kind of kickback there, I would go ahead and say, okay, here it is. And we've got a breakthrough and a throwback. Kind of like we were looking at one of the spots earlier in ETH BTC, where you break the trend line and throw back when the price is still well below. So that's no nothing close to any sort of guarantee that price actually will break through the trend line, of course. It's just a leading suggestion, a leading, indicator is not a guarantee-ornator. Okay. So that's a good sign, I would say. And maybe a bull trend line. The RSI is tough to use for trend lines this long. I want to just use it kind of for this leg. Like, for example, we were looking at this earlier and being like, I don't think I actually saw this in real time. It is interesting how the oscillator is in more of like a falling wedge than the price as a symmetrical triangle. So that is interesting. And then here, the breakthrough and the throwback. This price is still right around there. Okay, this is not what I was planning on looking at, so I don't want to spend too much time there. Let's take a quick look at the 50 EMA, if you will. Acting as resistance, not the best sign. Okay, let's zoom in. Not much to see here. Nice support from the 200. Looking at the 12-hour, here's 200 EMA. It's all right. Potential 200 resistance on the 4-hour. So pretty typical of a range, some let's see here, some support from EMA like that, while you get like some resistance from an EMA like that, and come to a head somewhere in there. So yep, definitely seeing some signs of a range. Why is it that I'm not expecting lower than 10.4? Let's go ahead and take a look. We do have a low there, and we do see how lows have been holding. Like here, this is a trap that kind of takes out this low, but this low holds on this throwback, and then on this throwback we have a low kind of here. So if that gives, a lot changes. Okay. So quick look at BitMEX 1 hour. What I'm most interested in here is the Binance. So I think we looked at this last week with the indication being a range between the buoy and the moon. We still are kind of chopping around in there. You see we're not in a nice kind of trending posture. We're just chopping. Okay, the Binance chart actually has some really interesting, one thing that is very interesting. This. And I'm not like hunting around all the exchanges looking for a really good setup like this. This just happened to jump out at me, and it is a high volume exchange that I will be not discounting a perfected signal from EMASAR, and I'll share very briefly why I believe that is perfected. So the storm indicates a reversal, exhaustion in a bear trend. And what you really want is, like, you don't want, like, this was basically what you don't want. It did a good job of signaling the reversal, but that's a tough one. What you want is to have just like a strong move off of that test. When it kind of starts sticking up in here, that's when it is not exactly what we would, necessarily want to see. I mean, that's obviously a great signal, but the signal that is going to be more perfected is going to be where there's the move, the consolidation, and then the storm, and then this just holds on higher lows in a bull trend, bear trend. So bear trend signaling the price should move down, but we're on higher lows, and now we hit a storm signaling exhaustion for the bear trend. So that's the that's the perfected signal, and that doesn't necessarily mean it's going to work out. It just means it's a little bit more probable than others, or has a better strike rate, or maybe both. So I always chart BitMEX because it's the highest volume exchange, but a lot's been going on there lately, and Binance is nothing to stick your nose up at in terms of the volume they've been putting out. So seeing this signal there has me very interested in this specifically holding. And if it doesn't, it being kind of one of these where this holds. So there's the 10-4, 10-3-8. And we could take a quick look at a 5-minute chart that has been telling me price should pull back here most of the afternoon. So this is your sky squeeze that indicates a pull back into the sky when it gets too close to the 200 EMA. Here, maybe you could call that a bulge or whatever. This is what is a sky squeeze, and that's when I would be looking for a return to the sky as the target. So, and this is also where I'd be looking for this to be a strong area of support, and been following this all day long here. Let's take a look at just some very short-term Fibonacci's because they are fractal by nature and work on every time frame. So here, what do we see is the shallow fib 0.382. Lining up with our sky. So that's just what I'd be looking for there, and tells me that this is a good buy zone based on risk reward and probability. I am looking to enter some there and set that stop below that low. And that's due to a lot of higher time frame stuff as well. So it's not like just looking for a 5-minute move. This would be seeing this as a good opportunity due to trend lines and a bunch of other stuff. So seeing potential for the prices we've been talking about for a while, 13.9, and you know, seeing this as kind of like a, I mean, not seeing this as an egg in the wall, seeing this as a signal that is a good one to take, and that if it fails, it's just fine, because the strike rate would need to be not very high for that to, you know, end up being a good spot. So I do think that 10-4 is going to hold, and I do think below that, therefore, should be a decent area for stops, and that is maybe slightly more than I was planning on going into, but hopefully some good stuff. I'm going to go ahead and get into ETH BTC and then get on with my night, much longer than I was planning on spending here. And I'm getting hungry myself. So I asked Fibbo to pull up some charts because I mentioned to him that I was getting some buy signals myself and would be interested to hear what he's seeing. And this is kind of one of those spots where he's kind of seeing this market, you know, moving down, and I'm seeing this as one of those spots that is a good setup for me. Okay, number one reason is this sky squeeze here. Sky coming into the 200 EMA / top of the beach indicates a move back into this sky here. So that's what I would be thinking, that entering around the top of the ocean to the buoy, which just kind of so happens to line up nicely here. That's a good entry spot. Stop loss would be below the bottom of the underworld. And then if I can trim right in here and set a break even stop loss, then that would put me in a good situation. So I definitely like that signal there. Also getting a higher time frame signal, 12-hour testing the beach here. And again, this is going to be where, you know, the indicator should show a lot of like kind of bearish movement, which I'm not trying to, I'm just trying to clarify some of the stuff that we were talking about earlier with Fibbo, just as a difference, not necessarily as something that is one is better than the other. So here we see the negative DI coming up and really kind of gaining some momentum as the ADX rolls up and the green DI falls down. So this is kind of what I would be expecting to see in my kind of sort of setup. Like here you test the beach, and that's what the oscillator looks like. So kind of just having a good feel personally for what I would expect oscillators to show during a buy signal for me. That's just a good thing to have a good understanding that as bears are gaining momentum in a bull trend, that's where they generally run into a wall, or at least what I would hope for / expect. Okay, so we got some good 12-hour situations there, and 4-hour good situation there. And ETH fundamentals, still terrible situation everywhere. Okay, so something else that's interesting is, so see we have the clear skies, partly cloudy, cloudy. As that cloudy progresses, now, I mean, we're getting close to a storm. Oh, and there we have it. So I've been waiting for is the signal that the storm is incoming, and to remove your orders from the beach. Get off the beach. There's a storm coming. Let's see if we can show how that works. Okay. So here we have the cloudy weather. And then you see how this beach changes to this light color to kind of tell you, okay, that storm that's here, and that will be here in only. It just tells you an exact number of candles. 30 bars. So boom, there you get the storm. And here's one that didn't work. We will be negating the storm now with the most recent update if you take out this high. So that's kind of the situation where this is looking real good right here. To kiss that and dump down. But for that short signal, that would be the stop is the local high, which is where we see the storm go back to clear skies. So I was just wanting to highlight this. That tells you that storm is coming in, and it is time to get off the beach. All right, come on. Computer's bogging down. Must be going on for too long. It's my signal. It's like when they tell you to get off the stage, they flash the lights at you. Okay, so highlighting that to show that we should be getting a storm right in here, and that I am holding off the last portion of the entry in hopes to get that perfected setup. Like that. Okay. Anything else on ETH BTC? Yeah, just a couple things non-EMASAR related. Anybody else seeing a wedge? Been keeping my eye on it here for a little bit. This is a confirmed falling wedge, if you ask me. No ifs, ands, or buts about it. The only question is if it will just not go anywhere. So seeing a confirmed falling wedge, that's going to be a good sign to kind of confirm the bullish entries. You know, those patterns. That's where I started, and that's always going to be something that's important to me. We're getting a descending triangle here that is really going to change my opinion of the market. Okay, so we're getting a falling wedge into a trend line. That's what I'm talking about. Yep. That's what I'm talking about. And fundamentals are still bullshit. But it looks like support is getting front ran. You know, I'd be looking for a throwback and into prior resistance to test it for support, unless there's just too many people trying to buy it here. So if this falling wedge goes nowhere and this trend line breaks down, I'd still be bullish as long as this held. If that gave and we really spent some time under there or fell too far, then that would be very much changing my opinion. So the main kind of confirmation for this falling wedge is going to be the fib. So I'm drawing this with the breakout that kind of started the move. I guess you could, maybe do it there. And we've got the pullback and into the buy zone with a bullish pattern. So that is my analysis on Ethereum, why I was so interested in buying some, and also when Fib asked about having not too much to talk about with Bitcoin, I figured why not have him chime in here because I think it is at a very interesting spot. And again, risk reward is very nice. You know, there's a lot of room to the upside, and that's where I would definitely be zooming out, looking at some markers on EMASAR, and then looking at some fibs. So here, you know, we've got that rejection from 0.382. This is what I was wondering. Fib was talking about the divergence here, and I'm wondering what he might be thinking about this, as the 0.382 seemed like a spot he might be looking at. But now that we've rejected that, if we can create a higher low, next target would be up here, which could provide some good risk rewards. So we have gone on for much longer than I expected, and the fact that anybody is still watching is greatly appreciated. Still triple digits, still over 100 people. So thank you guys for tuning in. I hope that you got a lot out of this, because I think that there was a lot in it. So yeah, feel free to rewatch and to reach out to Fibbo and Joe and tell them thank you for everything that they were able to share on today's stream, and for all their time, and for the great people that they are. All right, thank you guys. We'll catch you later.